Hello, I'm Markus Hummel, Managing Director of Oxford Energy. Welcome to Current Trends in Commodity Trading. This is part of a series of interviews carried out by Oxford Energy in order to understand the complexities of mid-tier CTRM companies. Joining me here in beautiful Vienna is Gerald Neher, Managing Director of ComFin, hello, and Daniel Gallar, Business Development Manager. The main purpose of this series of interviews is to understand the complexity in commodity markets. From your experience in the CTRM sector, what would you see as main challenges for oil companies nowadays?
Well, Markus, as you know, we're dealing with several types of companies. There are oil traders, refiners, producers, shipping companies. There are many different issues and factors that need to be taken into account. For instance, the freight markets remain somewhat weak. And I think the problem is that there's too much capital in the shipping industry and thus an overcapacity in shipping. In general, there's a high level of uncertainty, and the traders continue to face a high level of geopolitical risk, but especially in recent years, also a high level of credit risk. So we believe that this will be helping to drive additional spending in CTRM technologies, because simply risk management becomes even more essential.
Okay, thank you. Daniel, using these CTRM technologies, how can involved oil traders keep risk under control for such transactions under these circumstances?
Well, we help traders by offering tools such as the Bulldog, or more recently also ComCore, to manage those risks. I think over time we have come to recognize the increased importance of market risk, and we have reacted by providing additional and enhanced methods to take care of that risk. For instance, a couple months ago we released a new value at risk calculator, which not only supports the analytical or parametric VAR methodology, but also Monte Carlo and historical VAR, which depending on the products you are trading might give you a more realistic picture of where you stand in terms of your positions.
So from an ETRM standpoint, are you saying that value at risk is one of the most sought after features?
Well, Markus, there's very little doubt that risk management as a whole has certainly become increasingly important over the last few years in light of all the uncertainty these days. I would say that most companies are after a strong risk module that gives them a very quick view on their current exposure and also different angles to look at risk.
Are there any additional functional or business capabilities that you are finding as a common thread through these prospects?
Well, obviously, as Gerald said earlier on, we get to speak with many different types of companies like oil producers, refiners, traders, shipping companies. But certainly there are some commonalities across the board. Our position and mark-to-market features provide you with the necessary information to make quick and well-based decisions. All trading activities, for instance, are automatically processed and give you instant insight into your position and the value of your assets based on actual market data. Also, with the unrealized profit and loss report, you will be able to gain a detailed overview of current profits and losses based on open positions and actual forward market data. These up-to-date, well-structured P&L reports will provide you with valuable insight into which of your business activities are profitable and which ones are not.
Yes, that's correct. But other than that, we also often get questions regarding modularity or interfacing with other systems. Also, there's a lot of fuss going on about the cloud, where some companies embrace the cloud, others want to keep away from it, I think for various reasons.
Okay, very interesting. Thanks very much for that. We'll probably touch on some of those issues in our next interviews. And that's all for the time being. Thanks very much for watching and goodbye until soon.